Perfect. So I think let's start there. You just want to give us a quick background, intro, who you are, and how you got here.
Sure. So Jimmy Reilly. I'm the head, the president of the Fogo Foundation. My background is in TradFi, right? So 20 odd years at big traditional investment banks. Worked with a bunch of the folks that are here today, with Rob and with Mike from Pith, and a bunch of the cohorts that are involved, some of our directors on the Fogo Foundation. Always in sort of, grew up at JP Morgan, went to Morgan Stanley, sort of ran big businesses there. I was a partner at Cantor Fitzgerald for a bunch of years. I ran macro trading, and then I was a CEO of a company called Currenix, which was it is owned by the State Street Global Market. So one of the largest traditional fiat exchanges. And my background is in sort of building, operating, running these businesses, client-facing technology, compliance, operations, sort of the vertical across the board, from getting from point A to point B. Some of them included business plans, and from the ground up saying, what kind of investment spend do we need? How are we going to deploy it? What does the returns look like? How do we grow? What does expansion look like? How do we market ourselves? What's success? What's failure? 101 business type stuff. A huge amount of which I've learned in the past 6 months since I've joined Fogo is not just incredibly corollary, but a like kind with different acronyms, which has been a really pleasant surprise, seeing us be able to sort of put that experience and background to play.
Absolutely. Okay, so clearly you've done very well for yourself, and you get approached with this idea.
Only if you're only as good as your last trade. So only if Fogo is a wild success have I done well for myself.
I know you've had a few quality trades, but so you get approached with this idea, right? Rob, we all know and love Rob, comes to you with this crazy idea. I want you to join Fogo, not only join Fogo, but build the Fogo Foundation and run it. Why did you say yes?
Why did I say? One, if I'm completely honest, because I love Rob deeply, and he's important to me. I guess, look, the concept of Fogo, right? And I'm not going to sort of relay a lot of what folks have spoken about here today. The hybrid model that we're putting forward, sort of best in breed with the benefit of hindsight, being able to build this thing with sort of interoperability, composability, but speed, and what we think this will become. The reason a lot of it works, a multi-local consensus, these things have existed in traditional trading on Wall Street for many years. Right? So when Rob sort of brought the thought to me and said, "Hey, look, we're going to have this zone concept, and we're going to have consensus take place within data centers that will provide benefits of speed and all the things that we think are so important." I thought he was kind of joking. I said, "Obviously, somebody's doing this already. It's absurd. This isn't new. We did this for many years at big banks and trading firms, and obviously somebody's figured this out already." And lo and behold, the thought was there, but nobody put it into play, and not put it into play with the background and team that we have doing this. So to me, it was kind of a no-brainer, right? It was like somebody saying, "Hey, I've got this sort of concept for a Ferrari where everybody's still driving around in these Pintos, and I know what we've got, and we're going to get the band back together, and we think that we can sort of supercharge this thing." So it's a super cool, and to see it go from sort of conceptually, we've got a white paper coming, and we think that we're going to put something out there that people will appreciate, to actually seeing and testing that and watching people put their hands on it, all the great folks and partners that were up here before us sort of proving it out, has been, it's been amazing. So, no-brainer.
Good, yeah. I think a lot of the TradFi concepts that you've been exposed to and helped build are now coming to life here as well, in large part thanks to you. So, appreciate that. We've talked a lot about technical infrastructure. We've talked a lot about trading today. I am very curious to hear your perspective about actually creating a foundation. There's a lot of legal entity stuff, paperwork, finance stuff that goes into how do we actually create this. It's a very common thing that exists in the crypto space, but not a lot of people have actually firsthand gone through creating one. So keen to hear, maybe what are some of the challenges that you've gone through, and how has that process been?
Yeah, sure. So look, there's a couple different ways that you can sort of structure a foundation, right? You can have a DAO structure. It can be just simply for the purposes of governance. It can be set up for the purposes of, depending on the maturity of the project, the people that are involved in it. It can be a relatively early stage thing, like with Fogo, where we've sort of put the foundation in place while we're still very much in the labs, sort of creating the network and the protocol sort of being built, and that running in parallel. You could have it sort of tip over from a team of engineers and founders that found that they needed sort of an operator to govern and run this thing after the fact. I think the most interesting thing for me about our approach to building out the foundation, and a lot of it will come post-TGE, right? So we're in mainnet soon, and that's when we'll have, we become the steward of the asset, and that's the most important thing, right? So the inventory that powers the protocol, we are the steward. We make sure that we sort of have, we support the sort of ecosystem via grants and partnerships and deal making. But I think even within that, there's two different approaches, right? You could have the VC model, and I with none of our venture partners are in here, and they think that I'm insulting them, but you can throw a bunch of things against the wall and see what sticks, right? And that some of it's going to stick, and a lot of it's going to fall off, and you can just sort of say, well, I'm here to be the grant machine, and let's go. Or you could take a different approach, and you could take sort of like a private equity approach, and you could say we're going to be focused, and we're going to make sure that our partnerships and the people that we're going to sort of put our weight behind, we're really putting our weight behind, and we're working in support of them, and we're sort of making sure that everything that we sort of do through the foundation is net accretive to Fogo, right? We're not going to have something that is just sort of this siloed, zombie thing that we did for the purposes of doing it. It's got to be additive in general. I think that's going to be the next level of cool stuff. And look, the vast majority of those things, we will be the recipients of these amazing ideas. So we're not going to come up with this, the next great sort of app. And the thoughts and the brain trust that have been brought to us, we're going to be in this incredible position where we're going to be able to say, we've got this, again, this Ferrari that you can sort of operate and build on, and will help you and support you. And, the success and the ownership is sort of yours, and we're going to be there in partnership with you. So that's the fun stuff, right?
Absolutely. I do think that is one of the unique advantages of building a purpose-built blockchain, right? Where it's not going to be quantity over quality, let's say, right? It'll be very narrow focused on that trading user experience and the high-quality applications that are going to offer that really high-quality experience to the end user. So when you think about the role of the foundation in empowering those applications, and maybe some of the criteria that you're going to be thinking about of how do we selectively choose where to allocate resources and invest, what are you going to be thinking about?
Yeah, good question. Look, it's hard, right? I mean, I'll go back to the VC model and the private equity model. We'll skew a little bit more towards the private equity model without an exit, right? Every private equity firm in the world has a 5 to 8 year time horizon. They put cash down, they help build, and then they extricate themselves via a liquidity event. That is, and it's antithetical, obviously, that sort of exit to our approach and our thought process. Everything that we do in any partnership and deal that we, and anybody that we want to support, we want to do it so that there's a net, it's going to benefit the entire ecosystem, but it's also going to be in some way, shape, or form additive to the Fogo network in some way, right? So the interoperability, the composability of a bunch of different apps and projects and builders that are either on a different competitive chain or will organically grow with us. If they're successful, the network is successful. If the network's successful, it sells itself. You don't need to bootstrap when people take a look at the speed and the advantage of building on Fogo, and they say, well, the success is, what would be the successful sort of launch here versus somewhere else is incredibly evident. And when you get to that level of, again, quorum, where you've got sort of people that have to be where the party is rather than inviting them, then you're sort of not end state, but you're in a place where you've got scale, and there's even bigger stuff, frankly, we can do. But that's my view. Is we're not gonna, we don't want to support or put our weight behind people that aren't serious about partnering and sort of benefiting Fogo, the network, and we also don't want to sort of have small flash in the pans, zombie type apps that are sort of here and gone again. I don't think it benefits anybody.
Perfect. Okay, I want to shift gears a little bit, maybe put you on the spot. So, are there any maybe stories or experiences, learnings that you've had from a legal standpoint in setting up the foundation? If anyone here is going to go through the activity of setting up a foundation, what would be some of the early flags that you might raise or things to be aware of?
Good question. So I, again, just to sort of put my background in perspective, I registered Cantor Fitzgerald as a swap dealer. So, to sort of date myself, I was there at Dodd-Frank in 2008 at JP Morgan. the rule writing and no action relief, and sort of I was there at the tables with the regulators, sort of making sure the financial system didn't collapse, and then sort of the propagation of all these rules in the firms that I ran. I would say one of the biggest legal things that I've learned is the huge roadblocks and obstacles that had been there even a year ago, right? Pre-Genius, pre-expectation around Clarity Act. Those huge, even if the rules haven't been completely rewritten yet, the intent and the appetite with which to write rules and give people some sort of a clear view of the playing field that they're going to play on is I cannot say how important that is, because opacity is bad for investment, capital formation, and new entrants into a space. It's just generally bad. I think that's one of the biggest things that I can impress upon people, how important that is. I think the other thing that I've seen and I've learned, and it's a bit of sort of a shock to us, there is a lot of complacency around while everybody else is doing it. And I think that's a bad strategy. I think just because everybody else is sort of handling things in a way that in traditional markets or in other conveyances, would just be inappropriate in some ways. I think it's super important to have kind of the North Star of principality. If it feels wrong, it is wrong. There's, even if there are rules that haven't been written yet to some degree, you could sort of, guess what the correct outcome would be had those rules been in place. I think that's one of the big things to me that's sort of not as hard to navigate in the absence of rules, because you sort of know right and wrong. And if you're principled and you do good business and you sort of understand the nature of the partners that you have, and everybody's of the same DNA, much, much, much easier than it otherwise would be. This, in very short order with some of these rule writing, will become incredibly clear. And I think the people that have set themselves up to be able to operate within this new regime and this new structure, because they were very careful in how they structured themselves, it'll pay dividends to the people that just said, what everybody else is doing, don't worry about it.
Yeah, perfect. Solid answer. Okay, cool. So now I want to change gears a little bit too, and there's a very common duality that exists in the crypto space of this pre-TGE, post-TGE projects, right? I think Fogo has done a really good job of kind of being the anti-VC chain in a way, not going out and raising $100 million, being actually more community-owned than VC-owned, but maybe Fogo could have had a larger pool of assets to work with earlier on, right? And pros and cons, but I want to hear how you're thinking about kind of the grassroots nature of the chain itself in terms of the raise, and then how are you thinking about resource allocation pre-TGE versus post-TGE?
Yeah, great question. Right, so we raised, it's sort of public, we raised $13.5 million, we did it via Echo. We don't have a bunch of big institutions with swords hanging over our heads saying, do this or do that, and when are we going to turn around and we're going to see our value return? The owners in Fogo are the small founders, and the myriad of owners and partners that have that are intrinsically aligned with the success of Fogo, not in the short term, right? In over the years, not months. So look, we've not raised a huge amount of capital. We're not going to go out and hire, to my point around sort of the see what sticks. We're not going to hire 50 people for partnerships and grants and just go out there and have 200 economists telling us where we should sort of throw things on the wall. I think we'll grow into ourselves, and we're going to let sort of our partners and builders, and we're going to let the opportunities come to us, and then we'll build around that. So, I think it's just a really bad strategy to go out there and raise a bunch of fiat cash because you can, and then be in a position of having to explain what you're going to do with it. You should be in a position where you've got an idea, you've got a sort of something that is incremental building growth, and you should be able to sort of plan for the capital expenses around that. And then in some way measure your success, right? You're not going to be right in everything. We're going to make a ton of fucking mistakes. And when you make a mistake, learn from it, pivot, don't just turn around and spread it out and hope and pray. It's just a bad strategy. So I think, if we're at a point where we say, hey, we need to raise some more capital because we are going to hire some folks that are really incredibly valuable to ourselves and our partners in the network, we'll do that. We can do that. And I think if we're successful, that won't be an issue. And if we don't need it, we won't do it. We'll operate lean and mean, and we'll be sort of able to we'll be able to kind of pivot as necessary, and we're going to let the market in some way sort of tell us when we need to add and bolt on people, and that could be via deal making, and that could be via human capital.
Yeah, absolutely. And is your calculus changing pre-TGE versus post-TGE? How are you approaching that?
Yeah, so look, pre-TGE, even from a foundation perspective, you're right in the first question. A lot of it is sort of legal structure, set up, making sure that we put this thing on a path where once the horse is out of the barn, that it's running in the direction that we want it to. Post-TGE, we're going to have, sort of an inventory, and we're going to be the steward of the asset and the treasury, the bank, and we're going to have to make sure that we sort of use that wisely in some capacity. It's not a money-making endeavor, right? So the operation of a foundation is not to run a hedge fund. It's not to be a for-profit enterprise. It's to be able to use the sort of the asset to benefit sort of the growth of the network, and I think that's a real serious responsibility. Just shooting sort of into the darkness feels irresponsible to me, and I think back to my sort of this is a marathon, not a sprint. I think we want to see incremental growth. We don't want to have this, hey, look at us, everybody, and then sort of try to figure out what's next. I think we want to build in a way that we can sort of see what's in front of us, and we can have that incremental network growth, constant. Right? You want this sort of upward shaping curve. You don't want a straight up shaping curve. I'm not talking about the asset value. I'm talking about sort of the adoption value. You don't want to see adoption go up and down again. You want to see adoption grow over time, and you want to see you want to see usage and participation and partner successes sort of continue. You don't want to have it stall or plateau. That would be an absolute failure on our part.
Up and to the right. You heard it here first. Okay, cool. And some recent exciting news coming out of the Fogo Foundation is actually Jonathan Edwards was recently hired. One of the leading crypto lawyers from Fenwick.
That's right.
Joined the foundation, and do you mind giving the people a little inside information to how that happened? What were those conversations?
Sure. John and I are on a golf course. John hits the ball 120 yards further than I do. It's as emasculating a thing as you can experience. And I've been thinking about, having a partner in that seat is incredibly important if we're going to be, if you think about things like RWA, and if you think about things. If you think about the partners and the people that are involved in Fogo and some of the institutional background that we have, and thinking about whether or not there's capital formation opportunities that are coming, you want to do this in a way. And look, you've got the U.S. government putting their faith in our partners, so we're a very serious project. And John ran what was effectively the U.S. crypto division of Fenwick, one of the largest, if not the largest, sort of crypto and has seen just a ton of successes and failures and what people do right and what people do poorly. And most importantly to me, and as a general counsel, he's a forward-thinking, sort of creative unblocker of things. So what he's not doing, he's not the kind of guy that's going to come in and say, hey, you can't do this, you can't do that. He's going to say, let's figure this out. Here's the way that we need to approach this. Have we thought about this? An amazing addition. Right? I couldn't have. It happened over me, sort of saying, "Have you thought about your career in the future? And would you ever come in house one day and where are you?" To suddenly us talking that night until 1:30 in the morning about his future, and literally the next day, jumping on the phone with Rob and Martine, one of our other directors, and talking until 1:00 in the morning, and here we are.
Love that.
Yeah.
Love that. Okay, nice. Okay, I might get in trouble for this one, so, but I was wondering for the people who made their way here, slogging through the rain, if we could give them maybe a little alpha, a little inside information. I've heard some rumblings about a Fogo ecosystem fund. You are fully entitled to say no comment to this question as well, but I heard that there might be something coming down the road here pretty soon that's going to be very high value, high impact for the Fogo ecosystem.
Yeah, look, so we happy to discuss it. So Bordeaux Capital. So we've partnered with them on Fogo Ecosystem Fund. We are we're an LP, right? We're the anchor tenant. They're creating, and they're happy to get more information. They're creating a fund that will be purposed for investing and supporting projects directly within the Fogo ecosystem. So they're raising capital. They're going to have other partners involved in the fund. The fund will direct towards early stage, mid stage projects, builders that will directly either deploy or will benefit in some way, shape, or form Fogo. Look, and I'm happy to kind of, very selfishly, it allows us to work with subject matter experts who can canvas an additional sort of swath of the market. They've done this a whole bunch, they've been successful. It allows us to see where maybe we ourselves wouldn't want to deploy capital into a particular project, but if maybe it's too small for us, maybe it's not the right partner, but we think it would have some benefit, we can sort of partner with them on this. So they become an extension of the foundation in some way, shape, or form. And they've got a long time horizon, right? It's an 8-year growth trajectory. This is not a flash in the pan. There's no liquidity events in a year from now. This is a building fund structure. It is not an investment vehicle for liquidity for us. So I'm really excited about it. They're in the process of formalizing everything now, and then we'll have a bunch of announcements out about it. And if there's anybody that wants to have a conversation with them, more than happy to put anyone in touch with them. They're a great bunch.
Perfect. Okay, well, I think people might be getting a little restless here and ready to go out and enjoy the festivities, but has it stopped raining? Does anyone know that question? No, hasn't. Okay, well, it should stop raining here pretty soon. We can go outside and enjoy some games, continue to hang out in here and chat, but Ed, I think that wraps it up, right?
It does, thank you.
Thanks, everyone.
Give a round of applause.